G'day folks, welcome back to another update for natural gas. Now the price has spiked overnight after a potential bearish outlook in the short term at least, but don't get too excited. We may see a further retrace in the coming days, so I'll explain why that is possibly. Before we go any further, make sure you hit that like and subscribe button to support the channel. But first on the outlook, today March 4th 2025, the natural gas market, US natural gas futures rose 2%, driven by record LNG exports and higher demand expectations. For the ETFs, BOIL, KOLD and UNG, BOIL jumped 15.2% to $90.88. KOLD dropped 14.9% to $20.26, and UNG rose 7.97% to $21.95, reflecting bullish sentiment. AI data demand for AI data centers could increase demand by 2.7 BCFD by 2030, with power consumption rising from 11 gigawatts to 42 gigawatts as utilities plan new gas-fired plants. And the overnight price spike, European gas prices spiked by 6.7% after a US-Ukraine meeting cast doubt on a Russia-Ukraine peace deal, tightening global supply concerns. So first looking at the natural gas price, and we always look at the long-term trends. I've got the monthly, the weekly and the daily. And on the monthly, you can see here the CCI has been bullish for a number of months now. Likewise, it's on a CCI 150. And likewise, the price has broken above those moving averages as well. And again, for those new to the channel, these moving averages are available in the description below. There's a video there to reference, and if you want to learn how to draw those on your own charts. So bullish movement on the monthly and bullish momentum also on the weekly. We've had a couple of dips into that moving average range with a weakening price, but again, they're both broken out to the bullish side on the weekly as well. And on the daily, you can see there the CCI broke to the downside initially on the daily, but it's finally broken into that moving average range, giving us a neutral signal on the CCI with a nice big strong bullish candle yesterday or overnight, my time, above those moving averages. And if I drew the indicators or the trend lines on the daily, you can see there it's hit that resistance initially back there on the end of February at 43.64, dropped off below this diagonal support line, which coincided with this minor support at 39.46. That was a resistance previously. Broke below that, again hit that that moving average range, and it's bounced out of there and above that trend line. We may see it come back to this trend line in the coming days possibly, so just be aware of that. But again, we're neutral on the CCI. If we go to the intraday chart, the rule is we always trade in the direction of the higher time frame. So if you're trading on the daily, you trade in the direction of the weekly chart. Here we've got the intraday chart. I've got the 1 hour here, and if you're trading on the 2 hour or the 4 hour, just interchange the 1 hour with your time frame. But again, you trade in the direction of the daily if you're trading on the intraday. At the moment, we're unsure where it's going exactly. Look, it looks fairly bullish, and the reason I say be careful of going too strong and putting too much weighting on the bullish side, you'll see here we've got a bullish move on the 1 hour. It's starting to pull back a bit, so we might see a bit of a weakening into that moving average range. And the way you would have traded this would have been to go short during this period when it did decline on the daily, and you would have taken some short trades here, and I've demonstrated that previously. So you trade when the CCI breaks below the moving average band, but also when the price breaks below. So you would have gone short on that candle, and you would have closed it out. So short on that candle, or this one here, sorry, and you close it out when the CCI breaks into that moving average band. So the close of that candle, that would have been a 2.1% gain in 17 hours of trade. A couple of false breaks. It's not a perfect return, but again, have your stop losses above the moving average band on the price, and go again short when it breaks into those areas. And you would have had the last good trade on a short side would have been that candle there, and you would have closed it out right near the bottom there at that candle. That was a roughly a 3.3% return at 15 hours of trade. The other thing to notice as well is just looking at the daily here for a moment. We've got also, there's no divergence currently shown here on the hourly chart, but if you look at the daily, let me just expand that for a moment. There's no divergence here either, but notice if this price keeps rising and hits this resistance or breaks above it, so long as this CCI remains lower, I want to mark it just as a reminder. So I'll go from that point there. So long as that remains lower than, so in other words, lower highs versus the price, then we're going to consider that a bearish divergence. It's a bit too early to call yet, but I'm just giving you a bit of a heads up. We'll see what happens in the coming days. Again, if this price breaks up to equal this resistance or higher and the CCI remains lower, that'll be a bearish divergence on the daily. So just be aware of that. So don't get too cocky and put too much weighting on the bullish side yet. We want to see this break higher than the resistance, but we also want to see the CCI break a lot higher as well, or start moving in line with the price action. Also, just looking at the multiple indicator, I don't always cover this chart, but this indicator, but basically this indicator down here, when it breaks above the +2, it gives us a bullish signal as per these arrows on the chart. And when it breaks below the -2, it gives us these bearish arrows on the chart. Now you'll notice I don't trade these in isolation. In other words, I don't go long every time these show up, even though they do sort of pick near the tops and the bottoms. The way I use this is when I see a bearish divergence and you see some red arrows, that's just adding more, I suppose, evidence that we might see a bit of a pullback. And likewise, if you see a bullish divergence, and I haven't got a bullish divergence to demonstrate here for you, but when you see a bullish divergence, again, with blue arrows, that's also a sign to potentially get ready for an uptrend. But you'll notice here as well, back here we had a bearish divergence, higher highs on the price versus lower highs on the CCI, and we had a few red arrows in that area, and that actually pulled back in that range, and it actually pulled back well below to our Fibonacci levels. At the moment, so again, we've got a potential, and I emphasize potential bearish divergence. Hasn't become materialized yet as a bearish divergence, but we've also already got some red arrows indicated by this indicator. So again, early days, but again, if this price rises and the CCI remains as a bearish divergence, then we're going to consider that a potential weakening in the price. Doesn't mean a crash in the price, it just means a retrace to a Fibonacci range. So for BOIL on the monthly, we're still very bearish below the moving average range. There's no CCI for it, but you can see here it's approaching that moving average range, so it's coming towards a neutral positioning. On the weekly, it's been bullish now for some time, for a number of weeks. After this bullish divergence, you can see there are higher lows on the CCI versus lower lows on the price, and it eventually broke through that moving average range, giving us a bullish momentum in line with the CCI as well. On the daily, we did hit this resistance at 96.80. It broke down into our moving average range, and it's still a bearish momentum on the CCI. Although it's pulling back again towards that resistance. So again, just be careful. This might actually come close to that resistance and then bounce further to the downside. So again, I wouldn't be going long yet. I'd like to see this break above that moving average range like it was back here to start taking long positions based on the daily. If we go to the intraday chart, again, taking short trades only at the moment, but again, at the moment on the hourly, it's bullish. So obviously no short trades. But you would have taken some short trades back here during that period on the downturn. Notice also it's hugging this diagonal ascending line, and it's bounced off that quite nicely, and it's now approaching that resistance again. So again, this is a similar pattern to the natural gas price. If this price rises near and high, at least equal to or higher than that resistance, and this looks like it's going to be a bearish divergence on the CCI, we may see a pullback eventually in a few days possibly, or a few hours at least. So for KOLD on the monthly, it's been bearish now for a number of months. There's no CCI for it. On the weekly, we had another bullish divergence back here versus lower lows on the price. This broke out a lot earlier than BOIL, and it showed us bullish momentum on the CCI, and it's been bullish most of that period until more recently it broke below that moving average range, giving us a bearish signal on the weekly. On the daily, you can see there it's bounced off this support, and it's overnight it's currently hit that support again with that wick, and we did draw this bullish divergence previously. That's still in play, and so long as that is higher lows on the CCI versus lower lows on the price, we're going to keep that as a bullish divergence. So we may see a bounce off that support possibly, and that again, this is the inverse to the natural gas and the other ETFs, but we may see a bounce off this in the short term, and if that materializes, we want to see it potentially break above this moving average range, and that'll be our immediate target, so long as that doesn't fall any further from that support level. If we go to the intraday chart, Again, you can see there bullish movement on the daily, and on the 1 hour it's also been bullish, but it broke down overnight below that moving average range of the price, but also the CCI. Now again, that previous target, that was a 23-38% Fibonacci range, and again, just to emphasize how that's measured, we take it from the low to that high. Actually, that would have been, let's try that again, that would have been back to, was it this one? Yeah, that was the previous high that was drawn. That was a 23% range that was drawn previously, and that little peak there just hit that range initially, then it fell back again. So that 23-38% level is the minimum retrace level you expect it to hit, and more than 90% of the time it hits that. But at the moment, as I said, it's come back to this support, and it's broken into a bearish outlook on the hourly, even though the daily is bullish at the moment. And lastly, for UNG on the monthly, it's a fresh breakout above the moving average range on the monthly price chart, and on the CCI it's been bullish for a number of months now, above that very narrow moving average range. So bullish movement on the monthly. On the weekly, again, we had another bullish divergence back here. Long term started near early 2023 versus lower lows on the price, and eventually it broke up past that moving average range in accordance with this CCI movement. And on the daily, it hit this resistance up here at 22.72, and it looks like we're going to come towards that resistance again, at least, similar to the other charts. Again, the CCI is broken to a bearish momentum, so just be careful. I wouldn't be going long until I started seeing this break above that moving average range to be more positive about going long. And then if we go to the intraday chart, again, you can see there, similar to the other charts, I've drawn this diagonal trend line. It came close to that, and it's bounced up, and currently bullish movement on the hourly, and looks like that's going to rise towards that resistance, as I said, after hitting this bearish divergence back here. Hit the target range, fell almost in the middle of that, and then bounced out of there again. So again, avoid going long or short at the moment on UNG until we see more definitive move on the daily, if you're trading on the intraday, before you're taking any trades. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page, where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.